There could be a stock market crash ahead, but the bubble could also continue. We have discussed this in the last two videos regarding the market, and the key is that we cannot predict, we have to be ready for whatever happens. As Warren Buffett says, a prediction about the direction of the stock market tells you nothing about where stocks are headed, but a whole lot about the person doing the predicting. And therefore we discuss, but we do all that fundamental analysis just to create possible scenarios so that you can see whether you are ready for whatever happens going forward. Warren Buffett is ready because he has 36% of his assets in cash, getting a 4-5% treasury yield. He's happy with that. So whatever happens, Buffett is ready. I'm very happy with my portfolio. Whatever happens with the economy, now you have to see whether you are equally ready. So we have discussed scenario 1, the stock market bubble must continue on printing, etc. But we can go into scenario 2. There can be a continuation of a bubble for a year or two, then we can have a crash, then can be nothing for a while, then it can go up and down. There can be a scenario like everything crashes and stays lower for 2 decades, and then you might think, Sven, you're crazy. Look at this, the stock market in Japan, after going up 3x, was down 80% for 20 years. This is not Japan. Well, the S&P 500 is up 3x over the last decade. Japan was up 3x then. And I'm not saying it will happen. I cannot predict the markets. I'm not trying. I am just looking at my portfolio, and this is also the message of this video. Look at your portfolio, and are you ready for anything that can happen? Because we cannot predict. How to be ready for anything that can happen? The solution is always fundamental value investing. Warren Buffett is not timing the market, he's just selling on fundamentals. We have on one side the treasury with a 4-5% yield, no risk, of course, no growth. We have Apple, 3% earnings, doing crazy expensive buybacks that takes away the 3% of the earnings, does 0% at no growth. So you have 5 here, you have 0 here. That is the fundamental analysis Warren Buffett did for Apple, where Apple can crash 50, 60 or more percent, treasuries cannot crash. So it is all about fundamentals, and that's a kind of a risk and reward analysis you have to do for your own portfolio. And if we look at the fundamentals of the S&P 500, you can see that we are up 3x, and also the valuation is significantly up. It is double the historical average valuation, and if it just reverts to the mean, we are 50% down, which is crazy and something people would never expect. The earnings yield is just 3%. Most companies are spending on buybacks, thus at these expensive levels the buybacks are even more crazy. Earnings have been growing good over the last 2 decades, but those are again exuberant times. We can also have a decade of increased taxes with all the government spending, and you can have earnings here that don't even grow, the orange line, for a decade or two. Then you have these booms, then you can have a recession, a crash, and going forward. I will not assume anything, I just put things into my value investment quadrant, and this is what we racked up on YouTube for now. Berkshire, as we discussed 2 days ago, is now a hedge. We have food that has a good risk and reward, a bit more riskier, Samsung that you can make money, and Ulta. So compared to the market that is risky for a low reward. Keep in mind, it is a long-term process of building such a portfolio. Take your time, analyze your portfolio, and I'll see you in the next video.